Ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news: clashes in the Strait of Hormuz are unstitching the uneasy ceasefire and giving credence to those sceptics who saw the truce deal between the US and Iran as superficial and flawed. The US believes its own propaganda, thinking it's negotiating from strength, but no one else does, least of all Iran. US allies in the region are starting to realise the US will throw them under the bus for its own ends. Tankers, bulk cargo vessels and other ships are exiting the region, but most tankers are heading to China or in the Russian shadow fleet. Those who need insurance are holding back. But first, this week will feature the usual monthly real estate update releases later in the week, including for building consents, plus the big end-of-month data dump from the RBNZ. In Australia, the focus will be similar, where we'll be looking for early signs of housing market reactions from their new budget settings. Elsewhere, there'll be important PMI updates from everywhere to give us indicators. In the US, their July 4th public holiday will happen on the July 3rd this year, so it'll be a compressed week of labour market data there, culminating in an early release of their June non-farm payrolls report, when 114,000 change is expected. In China, they say artificial intelligence is reshaping the global labour market, not by triggering mass layoffs of existing workers, but by causing employers to pull back on hirings for new entry-level positions. China's also reporting industrial profits are recovering, up 21% in May from a year ago to 3.1 trillion yuan, and faster than the 18.8% rise in the first 5 months. These latest results reflect the ongoing AI investment boom and continued policy support for advanced industries, despite lingering weaknesses in parts of their property-related sector. In the EU, an ECB survey revealed that median year-ahead inflation expectations eased to 3.5% in May, the lowest in 3 months, down from 4% in each of the previous 2 months, which were the highest readings since 2023. Longer-term inflation expectations were steady at 2.9% for 3 years ahead. Consumers also expect house prices to rise by 3.6% over the next year, slightly below the 3.7% in April. Expectations for mortgage interest rates were unchanged at 4.9% there. And according to the World Meteorological Organization, they are saying the severe heat dome over Europe is expected to continue, affecting much of Western, Central and Southern Europe over the next 2 weeks. There are likely to be economic impacts soon, and as the summer progresses, these impacts may well affect economic activity in a material way there. And the Bank of International Settlements said over the weekend, global pressures from rising public debt to financial fragilities and questions about the sustainability of the AI boom are increasing systemic financial risks, which they suspect could end in a bust. They warned of a complex mix of vulnerabilities, including strained fiscal positions, lingering supply shocks, and the risk of a renewed bout of high and sticky inflation. In the US, their merchandise trade balance worsened in May. Imports rose 3.6%, while exports fell 5.4%. These were much larger shifts than were anticipated. Clearly, tariffs aren't working other than to make imports more expensive and hurting exports. The net result was a $103.5 billion deficit for May, the largest in the year, and their largest deficit for a May ever. And we should also note that the US inventories are rising, and quite quickly. In May, wholesale inventories were up 4.4% from a year ago, retail inventories up 3.1%. The stockpiling we noted in their PMI activity is adding dead weight to their logistics systems. The University of Michigan Consumer Sentiment Index was revised up to 49.5 in June, although that was less of a revision higher than was expected. Still, sentiment improved from May, which was the lowest level on record, supported in part by a moderation in petrol prices. And that is despite the fact they remain 31% higher than at the start of Trump's failed Iran venture. But this didn't stop shoppers at Amazon's Prime Day 4-day shopping event. Prime Day 2026 was exclusively for Prime members and ran from June 23rd to June 26th. The wrap-up shows more than $26 billion was spent in the period, up 9.3% from last year, and that is expected to be half related to inflation and half to a volume gain. And in Australia, it seems that last week's auction results will show they had their softest sales period in more than 5 years, with many properties failing to sell. Also unfolding is the scale of mortgage fraud against banks by a surprisingly wide section of their mortgage broker community. To defend themselves, the banks are drawing up a blacklist register so that brokers just don't go shopping around for vulnerabilities. The US Treasury 10-year yield is now just on 4.37%, unchanged from this time Saturday, down 12 basis points for the week. And the price of gold has risen to $4,089 an ounce, up a net $15 from Saturday, but is down $66 from a week ago. Silver is now just under $59 an ounce, down $5.50 for the week. And oil prices are a little changed from Saturday, at just on $69 a barrel, while the international Brent price is now just on $72 a barrel. A week ago, these prices were $77.50 and $80.50 respectively. Hormuz transits have eased off noticeably after the recent flare-up in fighting, with just 16 crude and product tankers exiting over the past 24 hours, but 24 entering for new loads. Over the past 2 days, more than two-thirds of the exiting vessels were headed to China. 9% were Russian-linked, 5% headed for Singapore, 4% to South Korea. There are still hundreds yet to try their luck, no doubt inhibited by insurance issues. And the Kiwi dollar is unchanged from this time Saturday at just on 56.4 US cents, down 100 basis points from a week ago though. Against the Aussie, we're holding at 81.8 Australian cents. Against the euro, we're also unchanged at 49.5 euro cents. That all means our trade-weighted index starts today at just on 60.3, which is down 110 basis points for the week, and still its lowest level since the GFC in 2009. And the Bitcoin price starts today at $59,497 and down 0.5% from Saturday, down 5.1% from a week ago. Volatility of the past 24 hours has been low, at just on plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.